Jim, thank you for joining us. Let's start out with setting the stage a little bit. Apollo has really evolved into just a really broad, diversified platform, fully integrated. It's really like an all-weather solution, right? Whether it's insurance, private credit, real assets, private equity, clearly. Can you describe in just really broad strokes your strategy and where you're really focused right now?
Sure. So pleasure to be here. I've been doing this for 38 years. I started in 1984, 85, and there's been four massive trends at that period of time. You had globalization, you had declining rates, interest rates, you had deregulation, you had technology. And I would argue that's the last 38 years, and I would argue the next 5 to 10 years, probably less globalization, probably more regulation, probably higher rates, and technology, who knows what's with AI, but you probably have what was a tailwind, now some headwinds. So as we sit here today, we obviously started out as a PE firm, and through 08, 09, we're very active in buying a lot of the assets from the banks. And what clicked to us at that point in time is if you can buy, leverage is a wonderful thing, but especially if it can be term and it allows you to buy great assets. And that was where it sort of clicked in our head. And we created Athene, which is a very, very complicated business. It's a spread lender. Doesn't insure homes, doesn't insure P&C, doesn't insure cars, doesn't insure health. And so really what we've done the last 15 years is when you're in the PE business, you have a very high cost of capital, 20% plus. The reality is not many companies need that solution. You talk to 1,000 companies, maybe 5 or 10 are curious about it. But the reality is credit is every day. It's the lifeblood of the economy. Congress learned that in 08, 09 when GE couldn't roll over its commercial paper. So the ability, what we've done at Apollo is very simple. We had some high cost of capital businesses, distressed, mezzanine, PE. We said, let's get a bunch of low cost capital businesses, fixed annuities. And so what we've done is now we have a business with about 600 billion of assets that really our cost of capital is pretty diverse. Long duration liabilities. And so I would argue that everybody in this room, if you're in the aviation business, you're in the private capital, private credit business. Businesses that still are at banks, formerly at banks. When people talk about private capital today, they tend to think about sponsor LBO financing, which has grown massively with investors. But the reality is we've just tried to create a business that in the tailwinds, which are now headwinds, which I described for you, and in a backdrop where broadly speaking, banks are playing a different role around the globe, and certainly a different role as people think about shareholder equity and return on equity. And as I often say, it's not that Lloyd Blankfein is 3 times smarter than David Solomon, but it's one thing running a business at 33 times levered versus 11 times levered. Right. And when your ROE is 38% versus 12%, we all know it. It's the power of leverage. Yeah. So we're in a business where we're really trying to bring long-winded answer. We just have a very diverse capital base to be at the intersection of retirees and borrowers.